In this video, I'm going to share with you guys a mistake that some beginner option traders make. So the mistake that most beginners make is the bid to ask price. So the bid to ask price pretty much is the difference between the bid and ask prices for the stock or security. So for this example, we're going to choose an Adobe stock. So we're going to press the trade button, trade options button, and we're going to go to the expiration. In this case, I'm going to go to the expiration on the January 6, 2026. And if you go all the way up, you go on the 940 call. Initially, you may look at this and say, oh, wow, it's $400. Because as some of you guys know, it's not $4 when you see the 4.00. It's times 100 because I have to get 100 share to have one contract in options. So when you click on that, right, you say, oh wow, it's $400. Let's just get the order of $400, right? But in reality, it's not actually $400. It's what some people are asking for. And as you can see right here, you have the bid and ask price of about $400 right here for the ask, and about $150 for the bid. Now you could pay anywhere in between. So in between that, you have the mark price or the mid price, which is about $275. So instead of paying the $400 where people are asking for, you could just try to get the mid price by putting a limit order in. Or what I would do is, when you look at the bid price and the ask price, I would come to the buy button here, and I will put maybe at 160 because most people ask for 150, right? And see if that gets filled. So I type in the limit price for 160, and I'll press review, swipe up, and see if I get this filled. If I do, great. If not, then I could see, as you can see, it's not filled right now. Being that it's not filled, I could just wait it out and see if it gets filled, or I could just try another number. I could go to replace order, change the price. Then I could try 180. The last trade for this was about 180, so I'm gonna try 180 now. And let's see if we get filled. Alright, let's go back. See if we get filled. Okay, we still didn't get filled at 180. So now we can replace the order, and let's put it for 190. Let's see what happens. Okay. Now I didn't get filled, but I could wait and see if I could get filled at this position. I'm not trying to hit the mid price right now. I'm just trying to see if I could get something, a number below that, but below the mid price, instead of paying the mid price or the full ask price. So let's see if 200. Let's see what happens. All right. So as you can see, we did 200, and as you can see right now, it got filled at the 200 mark, and now I'm up about $75, right? Versus if I had went in at the 400, I would have been immediately down from the $400, so I wouldn't have gotten any return. So it got filled at $200 mark, as you can see right there. So you can still see the mark price. I could have went to the mark price and put in that price, but I didn't want to put that mark price or the ask price right now. I'm at 200. I could have waited, as I said, but if I see the potential for this stock increasing significantly and I don't really want to wait based on my technical analysis or fundamental analysis, then I could just get the full ask price, or I could just get in a little bit higher than the bid price to get into a position. So as you can see, now we're up about $75 or 37.5% when I go in, once I got this contract. If I had bought this at $400, I would have been, and people are asking for 150 immediately, I would have been down about $250, right, based on this bid ask spread. Or if this $200 that I got filled, I would have been down about $200 versus now I'm up about $75. So that's a mistake that some beginners make when trading option, is getting bid ask spread that has a big gap with bid to ask price. If you guys want to get more information on this, you can check out my free stock option webinar. With that being said, remember to like, share, and subscribe. Let's level up together. Let's go. Remember, for His glory, peace.